Good morning. Welcome to the latest episode of Talking Ball. It's the 24th of May. I'm Joe, joined by Steve and Jamie. Jamie, I think, is having a few internet issues this morning, so we'll do our best to get him included along the way. But morning, gentlemen. How are you both doing?
Very good, thank you. Very
Good.
good.
Good to hear it. Okay, let's get straight to it then and talk through the latest headlines that's moving markets this morning. So first of all, the German services sector is resilient and it strengthened to a 3-month high of 93 for May from a revised number of 91.9 from the previous month. So comfortably also above the consensus forecast, which is good to hear. In terms of what's happening on the ECB side of things, the President, Christine Lagarde, stated that the bank was likely to be in a position to exit negative interest rates by the end of the third quarter. She also warned that the pace and the scale of monetary policy adjustment could not be determined in advance, and the situation is complicated by the presence of negative supply shocks. In terms of what's happening with the euro, we actually saw that hit a 1-month high yesterday. Euro and sterling continued to gain support from short covering, while the dollar was again hit by a correction as equity markets held on to small gains. Euro USD posted a 1-month high. There was a further element of short covering in evidence on the charts, which we'll come on to in a moment. What's going on the US side of things? Well, the Fed are on track for 2% rates in 2 months. That's according to the Kansas City Fed President George. He stated that inflation is clearly decelerating, but could jump again, and reducing inflation is the top priority. She added that it expects interest rates to be around 2% by August. In terms of the earnings in the US, we had Snapchat trigger fresh shivers down the US outlook for the economy. Although the US economy still has plenty of momentum, the San Francisco president of the Fed does not expect a recession, but shares in US media company Snap plunged after earnings warnings yesterday and comments that the US economy had deteriorated faster than expected in the latest month. So the numbers came out after hours. Jamie was going to take a look at how we're looking on the pre-market on that, because it's looking pretty ugly as things stand, but we'll get to that in a moment. And then finally, the Bank of England Governor Andrew Bailey spoke yesterday. He stated that the UK has a very tight labour market, but does not mean that the UK looks like a story about rapid demand growth, and retreated that the economy is facing a very big negative impact on real income, as we all know. So he said the bank is ready for more interest rate hikes if needed. So that's that for the news headlines. Now we can take a look at what impact all of this has had on price action over the last 24 hours and outlooks for the short term. Steve, do you want to kick us off today?
Yeah, sure will. I'll start with Bitcoin.
Bitcoin.
Yeah, what's that
There
all
you go.
about? Yeah, so price action on Bitcoin, just a reminder, this is the weekly chart. It's a bit unnerving when I see these sort of like volume figures showing where real volume's taken place down below around about, well, where's the point of control here? About 1500, is it? Is that what it is? Is that the point of control? Don't know. Anyway, let's take a little bit more of a look at where the price action really is, and we're around about this really crucial support, which I believe we will eventually break. I think we're heading towards at least 20,000, if not lower. Next level on my charts below that is 14,000, and 12 to 14,000 is quite decent support. But yeah, so that's not looking too clever on the weekly chart either. We can see that this price action is almost like bearish pennant, bearish flag looking. Yesterday's bearish engulfing, that was price action that took place quite late in the session. Look at the hourly chart, we can see that prices broke support around about 7 o'clock last night and then moved lower. So that continues to look on the back foot. Ethereum also mirroring the Bitcoin price action and looking negative, bearish outside candle, yesterday's price action. Ripple, same, all looking really that the sort of like they're following the same sort of like groove at the moment. There's no one's really standing out in my list of cryptos that looks any good. Commodities, let's look at something a little bit brighter, if it is. Yesterday, gold had a bit of a rally, ran into resistance at 1865. That again, that's a key resistance today. A break of there will target resistance at 1875 and 1890. If we get a breakdown below 1843, that will be significant because that will mean we've posted a shooting star type candle and will lead to an evening star formation, which is obviously it's mid-trend. It's not at the top of a rally, but as far as this short-term correction is, that is top of it. 21-day moving average on gold is quite a key level. 21 days sort of signifies the sort of the amount of trading days in a month. So that's a very popular moving average, just a simple one there. And looking at crude oil, the picture in crude oil still remains overall pretty positive. We are going through a gentle, let's get the parallel channel. This sort of channel move higher, so that's definitely something to watch. And we can, I want to redraw these fib lines as well. So this fib down to here, and introduce maybe the significant ones that we look at. So we have stalled around the 61.8, which is comes in at 113.30, and we still are in a positive move higher, further upside, I expect. Dips could be bought around about this 103 level. Also, this reverse trend line should act as support, and again, this 21-day moving average should be pretty good. That comes in around 106. So they're the levels to watch on the downside for buying dips. That's the way I feel it's oil continues to move.
Lovely. Thank you, Steve. Bit disappointed to say that I don't think we've got the stream up and running at the minute on TradingView. I didn't get the VPN set up in time, so it will be there eventually, but yeah, sadly it's not streaming live. We'll try and get that sorted for tomorrow's episode. But in the meantime, let's get into FX and starting off with the dollar index. And it's turning pretty ugly on the dollar index after months and months, it seems, of rapid decline in the value of the US dollar. As you can see here, really back from May last year, it's been on a pretty steep upward trajectory. Kind of went parabolic from this stage here, April onwards, towards the middle of May, but now we are seeing some corrective action going on. So we stalled into highs of 105.00. Look to have formed a little bit of a top on this. We've also broken through that short-term uptrend line. Yesterday was a pretty ugly day indeed, actually. So severing through these short-term supports, and we're backing that up with further losses again today, down by 0.22%. Now, obviously, that doesn't look great in the immediate term, but overall, as we can see, the trend is still pretty strong. So I'm not getting too carried away or upset by this sort of price action. I still think the long-term picture remains bullish for the US dollar, but it looks like we are going to see some sort of correction take shape. So I'm just going to clear that line off because it was a target level rather than a support. So what I did was I drew levels from the low in May last year to the highs in May this year, and was looking for that 38.2% Fibonacci level as my first kind of port of call of where this could potentially go to in a correction. And that would be a pretty healthy one overall. If we do see it pull back to that kind of region, it would just be back to trend support as well into this kind of area here. And I think that would be quite healthy overall and potentially lead to greater gains over the longer term. So looks like we're in for more weakness on US dollar in the very short term. Now, of course, that's great news for anybody that is long or looking to speculate long on euro US dollar, because it's the inverse of what we've just seen on the dollar index pretty much. We highlighted the fact that obviously this has been trading in a pretty horrible downtrend for some time now, as we know. It took out these lows here at 106.35 not so long ago before finally bottoming out at prices of around 103.48. Now, it looks as though we're forming some sort of rounding bottom. In the same way we formed a bit of a rounding top on on the dollar index. We've broken through this resistance to form what looks to be a little bottom. So I think we could be seeing a little bit more upside in this in the short term. Collectively, we saw the euro up over 1% yesterday, hitting 1 month high. So it looks as though we could be seeing a bit of a recovery here. So potential for speculators to make a bit on this in the short term. We're seeing this euro strength everywhere. This was also a quite interesting one. This is euro versus the Aussie dollar, potentially in the process of forming a bit of head and shoulders on this, an inverse head and shoulders that is. Let's just quickly draw that out so you can see what I mean. So I'm thinking something along these lines is looking like it could have the potential to play out. There is a big area of resistance here that it needs to overcome. So if it can do all of that, complete the head and shoulders by breaking through the neckline and take out these resistance levels as well, then there is decent potential on the upside for that. If we take a look at Euro CAD, we can see that we've started to see price stall a little bit here, form a little bit of a bottom potentially. Big band of resistance now forming at 137.62. So if we can see a breakout of that, then that could also spark further gains. Euro Swiss, we're seeing a little bit of support here. Not too sure about this one because I think Swiss franc's been pretty strong as well. Euro sterling, we talked about the potential for that being an inverse head and shoulders. Looked to be well on its way after the initial breakout, but then we saw a massive reversal. But that stopped as well, that stalled, and now it looks as though it's recovering a little bit of that. If we can start pushing back higher, take out this high here from the 12th of May, then the picture overall could look pretty pretty positive for that. So yeah, euro very much on the front foot. I'll leave it there because euro is pretty much the leader at the minute and where the interest is, and we can take a look at indices instead. So this is the DAX, and it still is contained by this short-term downtrend. Had a little bit of a look above it yesterday, but we are engulfing almost all of those gains already today, down by over 1%. And I think a lot of that probably has to do with what we saw from Snap yesterday and just a general shift in the sentiment of the market over the last 24 hours. The NASDAQ is getting crushed already, down by 2% already. In the pre-market, we're hugging this 50% Fibonacci level here at what price is that? Around 11,690. We're engulfing all of yesterday's gains. So if we take out this low here that we posted from this doji candle on the 20th, then it looks, for me, set to continue moving lower, with that 61.8% Fibonacci level being the level to target on the downside. Big rounding top formation here that's been playing out over many weeks. So
the
it
interesting
doesn't
thing
look
yesterday,
good.
Joe, was Dow was like pretty decent, had a pretty decent update. It was like up like 4%, while NASDAQ just didn't do anything. It just couldn't rally.
Well, that'll be down
And
to obviously the constituents. So
yeah,
30 stocks in the Dow Jones, which means it's going to be weighted by all sorts of different things that, you know, NASDAQ obviously isn't. So NASDAQ being a very tech heavy index, whereas the Dow is a very sort of narrow index really. If you want a sort of true picture on, I think, on the US economy, then the S&P 500 is the best place to go because of course it's a much broader index, 500 stocks across all sorts of industries rather than tech focused, obviously on the NASDAQ, or the 30 that we're looking at on the Dow Jones. So just to sort of highlight what Steve mentioned there, we are trading in a bearish channel from what I can see on the daily chart. We saw a really nice turnaround here on the 20th of May. We saw the same doji on the NASDAQ, but yesterday we saw a really big move to the upside. And we're trading within the body of that candle as things stand at the moment, only down by 0.8% on the Dow, as opposed to the NASDAQ, which is down already over 2% as things stand. But the price action doesn't look really any better. We've still got this huge rounded top formation on the Dow Jones. Now, when tops form in markets, they are typically a process rather than a particular price point. You don't see them sort of spike up and then come all the way back down. These are a lot more reliable when you see these big equilibriums, I suppose, of initially of buyers and sellers. That's what forms the ranges in the markets, and then obviously a buyer starts to take over. And for me, we're starting to see the buyer shift now to the downside. So we're going to see more downside on these equity markets, in my opinion, and that could go on for quite some time. I think the scary thing about it is obviously in that equilibrium, effectively what you're seeing is a shift from maybe the institutions getting out of stuff, but the retail's taking up the slack and still buying it. So they'll be trapped in that area, sadly. And this is obviously why risk management then becomes also important, because people won't want to let go of what they've got in here, and will not want to face the fact that they're probably going to start losing some money, sadly.
Yeah, absolutely.
One thing might be interested in doing is having a quick look at the volume. I don't know if it will work on this particular price feed, but if we go from the lows of the pandemic to the highs of, or even to the current price, sorry, because that will include all of those highs. What I'm trying to see here is where the money is. Where is the footprint in this sort of phase in the market? And as you can see, most of the transactions that have taken place across this entire move here are clustered around this sort of region, bang in the middle of that pattern. So we've seen a breakdown below that point of control, which is the red line. So this is where most orders took place, and that suggests that there is a lot of people stuck in here at this kind of price. And that won't just be obviously at an index level, that will be at a stock level as well. So
yeah, I think where the
scary.
darker colours are, Joe, that's where 70% of the volume is taking place, isn't it? So where the bottom of that the darkest bar at the bottom of the darkest bar there, that is basically below there. That's where you'll get stops as well.
Yeah.
So that, there's you can see there's there's opportunities to sort of really push this a lot lower, and that's where we
So I
are
mean, we're
trading
pretty
at the
much
moment.
there now
Yeah,
on that
yeah,
level of support. So if that flushes, there will be not much to prop it up down here, sadly.
yeah.
I mean, what I'd be looking for probably is the sort of fibs to see what support they offer. So we've got 38.2 actually at the lower end of that band. So if that snaps, then that could easily take us down to that 50, and maybe even down to 61.8 over the coming weeks and months.
Yeah.
Sorry if that scared a few people, but just trying to be as honest as we can and call it as we see it, pretty much from a technical basis. So I'll leave it there. And Jamie, you can I'm not sure you're going to raise the positivity by looking at stocks, but you can give it a go.
Yeah, no, perhaps not. Let me just quickly share my screen. Sorry, I was having some internet issues, so that's why I was a bit late on. But I'm here now. We'll start off with our biggest gainer and loser. Let's start with the biggest gainer. Just get a bit of temporary happiness. CBIO up 234%, which is pretty cool. Catalyst Bioscience stock surges after Vertex Pharmaceuticals buys Catalyst's complement portfolio for $60 million. So yeah, a good one to have been in. Perhaps not great technically on the way down. That's not something I'd have loved looking at, but a little bit of a ray of light.
Have they got a cure for monkeypox as well? Have they? Is that why?
Quite possibly. They seem to all have a cure going for that, don't they?
Yeah.
No TV, as I read it, but it's actually Innovative. I prefer No TV. Down 28%. There were some quite nice technical levels on this stock. Just when I had a look, there was a kind of an initial break of this level and then a follow through as well. But this was down for Innovative. Says U.S. Department of Justice files complaint for alleged animal welfare violations, which isn't a good job at all from Innovative. We don't like animal welfare violations. So they're the biggest gainer and loser. We'll quickly jump into, let's see, have I still got this down? Jump into our heat map of the S&P 500. Where are we? Here we go. So it's a bit strange, actually, because you look at this, you think, oh, it was a pretty strong day across the board. And it largely was for these individual stocks. The first thing I gravitate towards is your Microsoft, Apple, Google, Amazon. How did they get on? They all did pretty well. Amazon didn't, but Google and Apple and Microsoft had pretty decent days, and you can see a sea of green as you stare at that chart. The really bright green color you see on Apple and Microsoft means that the stock you're looking at was up 3% on the day. But I think what really happened, the real talking point of the day, was what happened towards the end. And we'll quickly jump into that now. We'll start with it. So Snapchat, I believe, has earnings coming out, but it issued some guidance yesterday on those earnings. Perhaps we'll check the corporate calendar after to get the exact date and time. But yeah, some guidance on earnings, and it actually ended up, this is the post-market chart. You can see it was down pretty substantially after hours. If we take a little, let's go to an hourly chart. So we ended up from the open of this 10 o'clock time, we're down 30% after hours, which isn't great. And that actually had a bit of an effect on some of the other stocks like Snapchat. This was an idea we actually put out a while ago. We looked for a break of this descending triangle continuation pattern we had. It's a bit, you can kind of see the lower highs, but the same level for the lows. We got the break, and we had this news which saw us over the line. So a little winner there for anyone that followed that idea. But yeah, this just didn't just affect Snap. So we'll check. I believe Twitter was down after hours as well. It doesn't look so significant, but down 4% after hours. Meta platforms, where are we? Let's find it. It's down pretty hard as well. All on the Snapchat news. So this was down, closed 7% down. I think the last one I saw was Pinterest, which was again down. This is a bit more actually, down 12%. It saw lows of 16, 17 almost. So yeah, I think that's the real story of the day. For something like Pinterest, we're already in this pretty sizable downtrend. We had this rounding top, which you referred to on the Dow. It was kind of like a slow process, like having this distribution, the sellers taking over. But when they did take over, we've had a pretty speedy move down. I think from highs, we can check the levels we've got here. From highs down to the lows, which I think will be there now because of the after hours trading, we're down about 80% on Pinterest. So a pretty rough time for anyone in Pinterest at the moment. But it was, like I said, it was a bit strange because it was generally quite a good day. Apple rallied. We said that it was an important level it was coming into, and it did rally up 4%. A little bit down in the late market, but still a pretty good day for Apple. Get the time volume on the screen as well, so you can see the significance of it. So that was pretty decent volume as well on Apple. So would be looking perhaps now to target this previous support level, which coincides with the 23.6% Fibonacci retracement. What else? Check out Google. Where are we? Google. Yeah, Google's still struggling a bit. I mean, a bit of an inside day. Nothing too crazy on the volume either. I still think we're looking for lower levels on Google at the moment. Again, this rounded top pattern we've got, it's not, as technical patterns go, there's nothing really clear cut here. There's not like a really obvious head and shoulders you could probably make a case for on, but you can see the sentiment shifting as we go. So I was going to try and get the pen, but I can never find it.
It's a pretty decent double top, I think. When you take a point there, that's the one of the tops and the point. Yeah, I see.
I think
breaks the neckline, and then that is the target. The target is the next support, basically.
Yeah, so that does actually play out quite nicely. I guess I meant that there's nothing. When I look at double tops like that's like classic pattern, you see the two tops and like the neckline is quite a clear cut pattern, which I get. You can make a case for this being this level, but yeah, no, you are right. And I think, like I say, there's nothing technically really now stopping this from coming down at least to that 2000 level, which will also be a psychological level as well.
Yeah. When you've been in the market as long as I have, Jamie, everything looks like a double top to me. It doesn't matter what it is.
No, it's it is there. I think these patterns do play out, don't they? You see them time and time again. And some are more clear cut than others. So you've just got to kind of be aware for the kind of the bottom line of what those patterns are, and it is seeing these two levels at the top that haven't been broken, and then a clear line of support that does get broken. You can see here, we referred to it yesterday. This, when we didn't get the rally at this level, got this clear breakthrough here, which I think was an idea we actually traded, but I don't have the history on it. We traded this breakthrough, and I think we took profit somewhere down here. So we didn't play the whole move, but we got quite a nice, I think it was a 3R win actually on that. like I say, bit of a mixed bag. Lift had a little bit of a lift, but this to me still looks like it could just be a bearish flag kind of forming. We had that steep drop off on earnings. Prices slowly drifting up, but nothing to be convinced by at the moment. Microsoft, similar to Google, I'm not super convinced by anything here. We did identify this head and shoulders a while back, so I'll quickly redraw it for people that perhaps didn't see the stream. So we got that left shoulder, head, right shoulder, and then the neckline break around here. So looking for lower levels on Microsoft. I think when we have looked at this previously, we've had such a long run up that there seems to be a lot of room to come down here. And I want to use a bit more of what Joe's been using, which is this volume. What's it called? Volume VPVR. What does it stand for? Volume profile. That's it. Not market profile. Volume profile. And you can see the bulk of the trading for this, the point of control we've got on this kind of, let's say, from the COVID lows is at 205. So that could perhaps be where the next influx of buyers happens. Certainly this level, which we just pretty much steamrolled through, didn't have a lot of volume at all. So I guess that kind of checks out why price slid through there so easily. We will move on to interesting levels. Let's get rid of some of this. There's a lot going on here. There we go. What have we got here? CTS. We've seen this head and shoulders. It's playing out. This is Microsoft still. We'll move on. CTS. Here we go. Bit of a false breakout. We'll come back in. Nothing too crazy to report on that. DBO still looking to perhaps break this ascending triangle continuation pattern, but nothing really there. I looked at Hoft. I found Hoft there. Quite like the name. But we've been in this downward trending channel for quite a while. And it seems that we're kind of breaking through. And what I don't love about these kind of diagonal lines is you can kind of see them 8 different ways. So, I mean, you could draw that there. You could then just go and draw it here. But the important thing is you can see the lower lows. It's pretty clear, and the lower highs. But yeah, this again, you see the nice rounded top head and shoulders there as well. Come out to a weekly. This has been a pretty nasty looking run for Hoft. Poor Hoft. We looked at PBT for the last week or so. We had that nice breakout yesterday, and price continued its strong run yesterday as well. 1673 it's closed at. Earnings coming out in a week or so. We'll see how that develops from here. PCTI, same again, this downward trending channel. This was quite a nice one because we drew out this red resistance line before it ran into it again, which just shows that these levels do hold significance, which is quite nice. And you want to add this day PCVX. We've got this. It's not really a head and shoulders, a bearish and bullish head and shoulders, I should say, because it's not happened really at the bottom of the pattern. But you can see the psychology shifting here, that the buyers are gaining control, and it's pushed right back into this resistance level, which has been tested no less than 64 times. So I'll be looking for a bit of a break on that one to see a bit of bullish follow through. And finishing, what have we got here? Should be Sure Bank shares, again, hovering around the support level. To me, we are in a bit of an uptrend, but right now, until I really see a close above this kind of level here, I'm still not convinced that we'll see a return to this red resistance at the top. As we always say, when you hit these support levels, I want to see that instant move back off it, and this has been hanging around. It's been hanging around too long, and that's always a dangerous thing to do. So perhaps I've still got a little bit of a bias for a break, but wait for price action to dictate where we go from there. I think we'll call it a day. On the stocks there. But yeah, Snapchat's the main thing to keep an eye on today. That was obviously down the post market, and we'll see how that affects the rest of the market today.
Lovely. Thanks, Jay. Okay, let's take a look at the gun to the head trades then. So each day we pick a trade live on the video. We started off doing this as a game, and it's not meant to be a trading strategy. We just wanted to showcase some analysis and how we could do under pressure and pick something there and then and see how it played out. So each of the ideas that we mention on the video must have a stop and a target. All of the ideas must be placed at market. The ideas would expire at 9 p.m. UK time, or when the stop or the target is hit. Now, you'll be able to find these ideas on our TradingView TradingView profile under the ideas section. They posted in here with a little bit of rationale as to why we've done them as well. So you can check those out. And if you're interested in other streams that we've done, feel free to check those out too. Steve did a nice video on gold yesterday, and Jamie went into some detail on Rolls-Royce, one of the UK speculators' favourites. So do feel free to check those out, as well as other videos that we've done previously. So we keep track of these ideas. Obviously, they are time-stamped, and you can check them out. If you want to click on them, press the play button, you'll be able to see how those ideas played out over the period that we gave them. Not really much to report on that particular idea yesterday, and to be honest, it was the same for all of our ideas. I've never seen such a boring day on the trade ideas that we publish. We had a collective outcome of plus 0.05R on the session. A tiny win for Steve, 0.35, tiny loss for Jamie, and a tiny loss for me on yen currencies. So we go again today. Who's got something that they fancy?
I can
I'll
have a
go
little
then,
go.
shall I?
Yeah, go on then.
All right, so I'm looking at Aussie dollar. So we talked at the start about dollar weakness. So that is obviously going to have an impact on anything that it's linked to. This is the Aussie currency versus the US dollar. This is an hourly chart. Looks to me like we've got a nice channel forming here on the hourly. So I'm just going to stick with this and hope that we see a continuation higher. So I'm looking to go long of Aussie US dollar at the current price of 70.95. I'm going to target a move up to 71.70, which is just a tad above the average true range on the day. And I'm going to have a stop loss at 70.63, which is around 31 ticks. So that's going to give me a risk reward ratio of 2.43 on the day if that plays out. So that's my trade for today.
Nice. Good luck,
Nice
Joe.
one.
Who's
Good luck,
next?
Steve.
After you, Jamie.
Okay. There's not a lot I love today, honestly, but I'm going to try and buy the euro against the Aussie dollar. So I guess we're kind of hedging our bets to a degree. We're in this nice upward channel here. So my bias is to look for a buy. I'm drilling down to the hourly chart, and we've just had a bit of a breakout. It's nothing too clean yet above this previous resistance. So I'm going to look for a bit of a follow through. We had, what I quite like here is we had actually a touch of resistance, and this little pullback here gives me a good chance to get some decent risk reward in. I'm going to look at the average true range as well to see where we can target. So this is where price could be moving to. So we'll try and buy this here. It has got a little bit away from me, which is a bit of a shame. So we don't get the best risk reward. So we're actually going to look for a real pump up today towards these highs on the left side here. So we're going to buy euro Aussie dollar at 1.5112. We're going to take profit at 1.5262, and our stop will be at 1.5052. So this gives us a 2.5 risk reward, hoping for a bit of an extension higher into this channel on euro Aussie dollar today.
Nice one.
Thank you.
I'm going to take a look at NASDAQ. One of the things that Joe was highlighting was the volume, whatever it's called, and we can see that this is like a long-term chart. This is a daily chart going back all to 2014, even further if you want. You can see that sort of like the point of control really is around about this area here, around about the 7.5, 8,000 area, and we are getting to quite close to breaking down. If we get below 11,000, this index is in severe trouble, and this won't take very long to sort of like, this will be like a vacuum type effect. This will be where the stock market collapses. So just be aware of those levels, 11,000 all the way down to 8,000 before you can breathe. So that's just one thing I wanted to highlight before I dive into it. Now, I'm sort of a little bit confused by price action on the NASDAQ 100. Apple performed very well yesterday. That's part of the NASDAQ 100. However, the NASDAQ didn't rally like its big brother. Well, it's not its big brother. I suppose in terms of numbers, it's a big brother, but it's only got 30 stocks in it, the Dow Jones. But the S&P 500 also had a decent rally. So a little bit confused. And I said at the start of the week, I felt like the indexes had a bit of a rally in them. I wasn't really feeling it from the downside, but I think we're getting close to starting to question what is actually going on in the NASDAQ. So for me, just looking at it from a daily perspective, we can see that we are close to that that sort of like real support level. We should get support down here, 10,000, maybe 750. But that's 1,000 points away to the downside. So there is still plenty of opportunity looking for a short trade on this. It's in a clear downtrend on the daily chart. 4-hour chart, just mirroring that, just showing you that sort of like the channel. The last 3 candles have been negative in this 4-hour chart. We should get a little bit of support around the 11,700 level, but then obviously looking at the 11,500 as a bit of a target. Ideally, I would like to sell it here at 12,000, and that seems to be the level to watch in NASDAQ. But I am going to go for it. I'm going to, against my better judgment, obviously, going to sell NASDAQ. It's failing again in this hourly candle. Have quite a tight stop. I don't mind a 100-point stop in NASDAQ. It's pretty volatile, so 100 points isn't an awful lot. And really looking for maybe 250 points on the downside. Selling at 11,790. Targeting 11,540 and stop at 11,890. That's my trade of the day in NASDAQ.
Perfect. Okay, so Steve will get that published to TradingView. I can see that Jamie's done his. So there's the 2 ideas that we already mentioned, and Steve will get his up shortly. So feel free to check those out if you wish. In terms of data today, there are a couple of bits on the calendar to be aware of. First of all, we've got the German PMI index, which is already out. That came out 8 minutes ago. And then at 9:30 UK time, we've got the UK PMI index, which is the flash reading. And then at 2:45 UK time, we've got the US version of the PMI index at this afternoon. So tomorrow we've got the Federal Reserve minutes, so obviously that will be well watched and anticipated and could have an impact on price action as people position ahead of that. So we'll keep watch on that and obviously assess it tomorrow. But in the meantime, I think we can wrap it up there, guys.
Nice one. Cheers, everyone.
Cool. Have a great day. See you tomorrow.